Ladies and gentlemen, we now begin with our next session. That's going to be on Explore Key Trends Shaping the FMCG Landscape in India. The session will be taken by Manish Gupta, Executive Director, Nielsen IQ. Manish, can we have you on stage, please? A huge round of applause for Manish, please. Joining Manish, we have Praful Babbar, Director, Nielsen IQ. A huge round of applause for Praful. Over to you both.
Okay, good morning, good afternoon, everyone. So we'll quickly rush through what's happening in India FMCG. So while we're talking to a lot of, we're talking about contract manufacturing, a lot of it comes into the FMCG perspective, right? So we will today talk about what is happening in India, how is it poised, what are the kind of trends that we're seeing in FMCG, and that's what we'll cover in the next 15 minutes as we proceed. Yeah. So I'm representing Nielsen IQ, and Nielsen IQ is basically the only company in India which tracks performance of the FMCG market, right? So from that perspective, we will talk to you in terms of what are the kind of trends we see in the FMCG space. So before we get into an India perspective, just to give you a whole perspective on what's happening globally, right? So India FMCG is valued at about 5,34,000 crores and is growing at about 8.4%, right? But if you look at the charts below, you can clearly see that the kind of growth that we're seeing across the markets, right? But the interesting part that we see here is a lot of growth is actually driven by price. So we are all amidst inflationary pressure. So most of the growth is driven by price, while volume growth is still muted or on a decline in most markets. So even when you look at other markets on the left, right, very few markets are actually seeing a growth, but large markets like India are flat at a 0%, and other markets like Australia, New Zealand, Hong Kong, South Korea, Singapore, China are all showing a decline in the overall volumes. Now, moving to, while the first slide clearly shows that the consumption is on a hit, but I think there are still a lot of macro indicators which are really showing positivity and buoyancy in the market, right? So I'm just talking about a few indices here. So I'll just draw your attention to 3 indices that we've talked about here. The IIP, which is the Industrial Production Matrix, the Future Expectation Matrix, which is taken out by the Reserve Bank of India, and the Unemployment Index. All these indices are clearly showing that whatever higher growths that we were seeing are kind of in terms of negative indices have kind of stabilized, and we are moving towards a positive momentum. The unemployment rates have stabilized or have actually moved southwards, which is a good sign, which is clearly showing that there is a little bit of a positivity in the market, right? When you talk about the future expectation, we are clearly saying that there is a lot more positivity in the consumers. So this is basically shows that people are starting to think how people will start investing and how the FMCG market will behave. Even if we move forward, we have seen a lot of inflation, but the good news is the inflation is stabilizing. So a lot of inflationary pressures that we were seeing, the consumer price index moving up, is kind of in the last couple of months has stabilized to a large extent. The wholesale price index, when we talk about, is also stabilized, which is giving a perspective that, we can see that the growths are coming down. As recent as today, we see large manufacturers like Adani and Mother Dairy have kind of pulled down prices of their oil, which is one of the largest category in terms of cooking medium. So those are the kind of positive indexation or positive mindset that we are seeing in the market. Now, what's happening in FMCG? So like I said, when we are talking about the growth is largely about 7.7%, but a large part of the growth is actually coming from, a large part of the growth is price driven, Volume consumption is still low. Now, when we try to decode the growth, where is the negativity coming in, we clearly realize the decline is actually coming in from rural markets. So what is it that we see? That the consumption decline is driven by rural. All towns which are more than 50,000 population below, including rural, are seeing softness or decline in consumption. So most of the people in the rural market are deferring consumption or purchases in the market, right? There's a huge shift from large packs to small packs in the rural market, which is kind of giving a perspective of the overall decline of minus 3.5%. If you also look at the average pack size growth, which has come down by 7%, which clearly shows there is a downward down trading happening where consumers from a large pack are moving to a smaller pack. Amidst all that is happening, who are the manufacturers who are gaining? And we clearly saw a trend that there are smaller manufacturers that have started gaining. So we broke down the overall market into brands which were the top 400 companies, and we looked at all the companies below the top 400. And if you look at the share, so in terms of value, there are 81% market, 400 companies actually have about 81% share in the market, and the rest of the companies have about 18.9, which has actually moved from 18.3 to 18.9, which essentially shows that the small manufacturers are growing. And a very interesting trend is that the consumption is being moving to the smaller brands or smaller manufacturer-led brands. So there is a lot of buoyancy. People are willing to try out a lot of newer products because they are, and this phenomena really started moving from a COVID time where the shelves were empty. People tried local brands or regional brands, and they realized that the value proposition was no less. And we've clearly seen that there is an attachment, there is an inclination to how the smaller brands are behaving. If I just talk about Nielsen business, we have been able to kind of add about 100 plus clients who are actually regional brands or local brands in the last 2 years. So a lot of clients moving towards looking at how to really excel in the market and using data to make decisions. So that's what is the kind of buoyancy that we're seeing in the market. So while this was largely coming in from traditional trade and modern trade, I'll just hand over to Praful to talk about e-commerce.
Thank you, Manish. So we saw how the FMCG market has been a tough ride last year with price growth coming in, volume growth kind of a steady, flat pace. But everything is not grim. There is a lot of hope towards e-com. There is a lot of buoyancy in the online space. If you look at this chart, it essentially compares India to the world in terms of customer segmentation after COVID. So essentially, if we look at consumers who really thrived during COVID versus the other end of the spectrum where people really struggled after COVID with a lot of financial insecurity, we see that amongst thrivers, unchanged and cautious folks, there is a lot of openness towards buying only online. If you look at these charts, and this is a higher level as compared to the world. So essentially, in a nutshell, it basically means that Indians are more open to experimentation for FMCG online. If we can move to the next slide, please. Thank you. This, in a nutshell, also kind of puts FMCG in the larger e-commerce perspective. So if you look at these charts, they show the contribution of FMCG to total e-commerce purchases that happen online. And we see that during COVID second wave, we see the contribution of FMCG really growing to 13%. That's a growth of 46% on a really high base. These numbers, as you see on the top, are the kind of growth that we see in the industry, and it is growing year on year on a pretty handsome base. What we see in 2022, again, there is a movement back from FMCG to traditional trade. However, we see segments like fashion also growing in terms of contribution. Mobiles seem to be stagnating. So earlier, mobiles was the go-to category, but now we can see there is a lot of fragmentation towards FMCG as well as the other channels like fashion. Quick commerce, the latest kid on the block, and we've seen a lot of noise around this in the market, and rightly so. We've heard in the earlier sessions that the average turnaround time for an order placed on e-commerce is around 1 or 2 days. Now we have players that speak 10 minutes delivery. such as Blinkit, Zepto, and the others. This is not just an Indian phenomenon, it's actually happening across the globe. And we do see there are certain categories where consumers really want to look at quick commerce, and we see a lot of increase in the kind of portfolio that is available on some of these quick commerce websites. And this actually goes to show the sort of involvement that the Indian consumers have started having with the e-commerce channel. So essentially, in a nutshell, for e-commerce, it's a growing trend. It will continue to grow. The contribution of e-commerce for an Indian market is around 2 to 2.5% for FMCG, which compares to a country like China, it's around 20-25%. So there's a lot of potential to grow for Indian FMCG market. What is important to note is that there are certain categories. There'll be, of course, de-averaging of certain pockets of growth. Here we have called out some of those which will really be important in the future. Some of them being personal care and beauty categories. There's a lot of explosion in these segments. We see a lot of new players coming in, and that is going to be critical. There will be also focus on smaller towns. So it has started percolating in the smaller towns as well, not a metro phenomenon anymore, and we can expect that in the future as well. Right pricing is important. So customers, we know, defer their purchases towards weeks where there is offer activity taking place, either Diwali or Independence Day or Republic Day. They really look forward to purchasing during that week because there is high offer. So if we as a brand need to win, we need to ensure that we have the right mix for the product for the consumers during that window. And essentially, omni-channel is important. So it's not just online. We have to also work with the offline channel because the consumer needs the product anywhere that he or she wants to consume. So omni-channel strategy is going to be critical for growth. That's in a nutshell on e-commerce. Back to you, Manish.
Yeah. So I think the last point that was very critical from the audience that is here is the fact that there is categories like diapers, feminine care, home care, which are actually really big drivers in the e-commerce space. So, we always think that it is only about mobiles or fashion, but these FMCG categories are really making a big, and I see a lot of exhibitors here which are talking about these categories. So I think a great room for them, and I'm sure we'll be happy to engage with them. Now, I just moving from some of the insights that we've talked about, there are lots of ways we are actually helping most of the manufacturers. So we work with almost more than 300 odd manufacturers in the country, giving them insights in terms of how can they expand in the market, right? I'm just kind of demonstrating a few products which really make a lot of conversation with the clients. We can certainly talk to you about them at our stall and at the booth, but clearly talking about how do we grow in terms of the stores, because distribution is a big phenomenon or driver in the country. So we certainly can give you which stores you should land in with geotags, with photographs and everything for the top 31 countries. So today, if you have a question saying, which store do I go? You can certainly connect with Nielsen IQ and they can give you the list of stores where you should be going in Delhi or in Bombay or in Bangalore or in Mumbai. Moving further, we can certainly give you understanding of modern trade as a channel. So we have all the understanding of what is happening in modern trade, which categories are really growing, how they are growing, what are the private labels doing, and so on and so forth. So a lot of rich understanding on modern trade is available with Nielsen IQ. We can also give you the list of stores for modern trade and even the standalone modern trade. So in case you really want to ramp up distribution in modern trade, we will have the stores for you. Finally, because there is also a focus on micro market, there are certain solutions where we can break a state into multiple parts. So like a given example, Maharashtra can be broken into 8 parts, and you can try and actually focus on one of these geographies where you feel the category is very important and you really want to drive. So this is a product called District Dynamic Report, which really helps you drive at a micro market level, and a lot more detail can be shared on our booth on this one. So I think that's broadly a kind of a bird's eye view of how we engage with our clients and customers, and how can you benefit from Nielsen. So we would love to kind of hear from you and meet you at our booth on 0126. Thank you very much.
Thank you.
Ladies and gentlemen, come on, give it all you have. Give it up for Manish Gupta and Praful Babbar. Thank you so much. So we have a small token of appreciation for you. And I'm going to take the liberty and the opportunity to present it to the two dynamic gentlemen.